We're going to start off this second half with some interesting stock picks. Todd, you've got a bank you want to talk about.
Yeah, Oritani Financial Corp, ORIT is a ticker symbol. We probably don't know them here in the Midwest, but our viewers in New Jersey might. They have 25 branches in northern New Jersey. And I like the small cap bank space here. They have about $700 million in market cap, so they fit that mold. But the reason why is long-term interest rates have started to rise. Now they have leveled off a bit, but that steepening yield curve is really beneficial to banks. You'll see their net interest margins start to expand. And the reason is, if you think about it, a bank's business model is they take in deposits and pay interest on that deposit, basically on the short end of the yield curve, right? Because those are really short duration liabilities for them. And they collect interest on loans, which are usually longer duration. So the long end of the yield curve is starting to increase, while the short end is going to stay short or stay really low for quite a while. So that steepening yield curve, very beneficial to banks, especially small cap banks who generate most of their income based on the net interest margin. Also, you're seeing solid loan growth from this company and improving credit quality trends. So a lot going right for this bank. They delivered a solid first quarter earnings beat back in April, sent it to a Zacks rank of 2 as analysts raise their estimates. It has fallen back to a 3 here, which is a hold rating, just within the last couple of days. Kind of fell out of that 60-day window that we talk about here at Zacks. But overall, solid earnings momentum. Very solid income story here. They pay a dividend that yields 4.5%, which is very solid, one of the best within the industry. And like I said in the earlier segment, if we expect a kind of a flat market over the next few months, you're going to want some income to offset, the lack of capital gains. So Oritani would be a good pick for that. You're getting all that at a very reasonable price. They trade at just 1.4 times tangible book value. The industry average is 2.0 times. So there could be solid total return potential in this over the next 6 to 12 months.
Okay, yeah, I'd say a depositor payout of 0.25% is probably at the short end.
Yep.
Robotics.
Well, I'm still wondering what's the secretary of the company there. I mean, I just learned everything there is to know about that. So Todd made me look real bad. Robotics, iRobot. Because I like to just give a tease and then make everyone else do all the hard work of figuring out why I like this stock so much. But you've probably seen the commercials for the Roomba.
Right.
It's been very heavily advertised for the last 6 months. Now, they're only going to do that and continue on that pace if it's drawing a return. And it has. Sales have been up. We've seen earnings improve. Now, there's also a wet mop, similar to the Roomba, which is a vacuum cleaner, the robotic vacuum cleaner. So there's a wet mop version of that, so you can do your hardwood floors too. So good thing for lumber liquidators, maybe. All other stocks that I enjoy. But, I think the big driver for iRobot is government contracts. You're seeing the military use more and more drones and drone-style, robots in, dangerous situations. So look for that to be a big driver this year and next.
Okay. You have a leisure stock.
Yeah.
Polaris, right?
Yeah, Polaris Industries, ticker PII. They are in the leisure and recreational industry, and they really make all sorts of recreational vehicles, from snowmobiles to all-terrain vehicles, motorcycles, watercraft machines, and all of the accessories that go with it. The reason why I really started focusing in on this industry in the first place, though, is because when I took a look at the employment situation report last month and the month before, this industry was one of the industries that was creating the most amount of new jobs. So if you're looking at an industry that really is hiring at a very fast clip, obviously business must be good. If you were to take a look at their fundamentals, they have a 12-month projected growth rate of over 20%. They have sales at record highs. If you take a look at their margins are at 10%, which is 3 times that of their industry. And then if you take a look at their return on equity, they're at 49%, and that's 5 times that of their industry, so they look fantastic. If you were to take a look at their charts, I like the position because they have just broken out of a lengthy consolidation period, but they're still trading within about 2-3% of their breakout point. So I think getting in is still very, very advantageous. You take a look at their short-term price target. I have a 105 target, which is a 10% return. Over the long term, which is anywhere from 6 to 9, possibly even 12 months. I think it's going to be shorter. I'm looking at 121. That's That's over 28% potential return, and they pay a 1.8% dividend, so I really like everything about this stock.
All right, thank you all for that. And just so you know, the stock picks don't stop here every week. You can go to Zacks.com daily and find new stock picks and stock picking strategies. So if you're not there already watching this video, get on over and check it out. With everyone here, I'm Terry Ruffalo.